Have you ever pondered about the complexities of sending money overseas? It's not as simple as transferring cash from one account to another, especially when borders come into play. This Al Hussein Ali, student at School of Management, University Sains, Malaysia. This process, known as cross-border payments, comes with its fair share of challenges. Consider the high fees involved. Sending money internationally often incurs costs that can take a significant bite out of the total amount. Then there's the issue of transparency, or rather, the lack thereof. Without a clear view of how these fees are calculated, it's hard to plan or budget effectively. And let's not forget about slow processing times. In a world where everything is instantaneous, waiting several days for a payment to clear seems archaic. Finally, there are the regulatory hurdles. As laws and regulations differ from country to country, adding another layer of complexity to the process. But what exactly are cross-border payments and how do they work? Let's dive deeper into this topic in the next segment. Cross-border payments are transactions where the sender and the recipient are in different countries. These transactions are quite common in our increasingly globalized world. Whether it's a multinational corporation paying an overseas supplier, a small business owner purchasing goods from abroad, or even a person sending money to family overseas, cross-border payments are a fundamental pillar of our modern global economy. Let's break down how these transactions are processed. It all starts with the originating bank, also known as the sender's bank. The sender initiates a transaction, providing the recipient's information and the amount to be sent. The originating bank then sends this information along with the transaction request to a correspondent bank. Now, correspondent banks play a very critical role in cross-border payments. These are essentially intermediary banks that facilitate the transaction between the originating bank and the beneficiary bank. They are usually large, international banks that have established relationships with banks in many different countries. The originating bank sends the transaction details to the correspondent bank, which then sends it to the beneficiary bank. The beneficiary bank is the final stop in this process. This is the bank where the recipient has their account. Once the beneficiary bank receives the transaction details from the correspondent bank, it processes the transaction, converting the funds into the local currency if necessary, and credits the recipient's account. It's important to note that this process can involve multiple correspondent banks, especially for transactions involving less common currencies or countries with more stringent banking regulations. Each step in this process means more time and potentially more fees, which can make cross-border payments costly and time-consuming. Now that we understand what cross-border payments are, we can delve into the specifics of their challenges. One of the biggest challenges in cross-border payments is the high cost associated with them. Let's delve into this a bit more. The high costs of cross-border payments are influenced by several factors. Firstly, there are the foreign exchange rates. The fluctuation in these rates can significantly affect the amount the recipient ends up receiving. It's like a roller coaster ride, and unfortunately, it's one you can't control. Then let's talk about transaction fees. These are charges that banks or financial institutions impose for the service of transferring funds. They might seem small on an individual level, but when you're running a business with multiple transactions, they can stack up to a considerable amount. Finally, we have correspondent banking fees. This is the cost incurred when your money is transferred through several banks before it reaches its final destination. Each bank in the chain takes a cut, and the more banks involved, the higher the fee. These costs can make cross-border payments a costly affair, especially for small businesses that are trying to expand globally. They can eat into profits and make the whole process more complicated than it needs to be. So the cost is a significant hurdle, but it's not the only one. Cross-border payments come with their own set of challenges, and while the high cost is certainly a big one, it's just the tip of the iceberg. Speed is another major issue in cross-border payments. When it comes to cross-border payments, speed is not exactly the name of the game. Now you might be wondering, why are these payments so slow? The answer lies in the complex network of intermediaries and the differing regulatory systems involved in the process. To elaborate, When you send a payment across borders, it's not a simple point A to point B transaction. This payment often passes through multiple banks, each with their own systems, protocols, and processing times. Each stop along this payment chain adds time to the overall transaction. It's like taking a cross-country road trip with multiple layovers rather than a direct flight. Now let's add the regulatory component. Different countries have different regulations when it comes to finance and transactions. These regulations exist to protect consumers and maintain the integrity of financial systems, but they can also slow down cross-border payments. Banks need to ensure they are compliant with all relevant regulations, which means extra checks, additional paperwork, and yes, more time. So we have multiple banks each adding their own processing time and differing regulations adding layers of checks and balances. All these factors contribute to the slow speed of cross-border payments. It's a complex and often frustrating process, but it's not without its solutions. But there are ways to overcome these challenges. In recent years, technology has begun to revolutionize cross-border payments. The challenges of cross-border payments are not insurmountable. In fact, they are being actively addressed by a variety of solutions, including fintech innovations, blockchain technology, and regulatory reforms. Fintech, short for financial technology, has been a game changer. Innovative fintech companies are providing platforms that streamline the process of cross-border payments. They offer lower fees, faster transaction times, and enhanced transparency. The beauty of fintech lies in its ability to disrupt traditional banking systems and provide a more efficient, customer-centric approach. Let's take a look at blockchain technology. Blockchain, the underlying technology behind cryptocurrencies like Bitcoin, has immense potential to transform cross-border payments. It creates a decentralized ledger that is secure, transparent, and immutable. This means that transactions can be processed in a matter of minutes, not days, and with full transparency. It's like having a notary public in your pocket, verifying each transaction in real time. But technology is only part of the equation. Regulatory reforms are also key to overcoming the challenges of cross-border payments. Governments around the world are recognizing the need for updated regulations that can keep pace with the rapid changes in the financial landscape. These reforms aim to foster competition, protect consumers, and promote innovation. In the European Union, for instance, the revised Payment Services Directive has opened the banking industry to competition from non-bank payment service providers. In the United States, the Office of the Comptroller of the Currency has proposed a special-purpose charter for fintech companies, which could potentially simplify the regulatory landscape. These changes, however, are just the beginning. As technology continues to evolve and regulatory frameworks adapt, we can expect to see even more innovative solutions to the challenges of cross-border payments. As we can see, the future of cross-border payments is promising, with many innovative solutions on the horizon. So, we've navigated the complex world of cross-border payments together. We've delved into the challenges that businesses and individuals face, from the high costs associated with these transactions to the often slow speeds that can hinder our global economy's pace. The intricacies of understanding cross-border payments have been unraveled, shedding light on why these challenges exist in the first place. We've also explored some promising solutions that can help overcome these obstacles. Innovations in technology, coupled with changes in regulations, have the potential to revolutionize this sector. They are the keys to unlock faster, cheaper, and more transparent cross-border transactions. As we wrap up, let's remember that these are not just abstract concepts or problems for large corporations. They directly impact our daily lives, from the price of our morning coffee to the stability of our global economy. As we continue to globalize, understanding and improving cross-border payments will be crucial to facilitate international trade and personal transactions.